Life is always full of winners and losers, and it's the exact same in investing. So let's take 5 minutes to have a look at which share performed best across the FTSE 100 and S&P 500, and unfortunately, which share was bottom of the class. And sneak peek, I don't think it will be who you think it is. So let's start with top of the class in the UK. And if we look at the FTSE 100, and just a reminder, that's the 100 largest publicly listed companies based in the UK. It's a company called Fresnillo, who you may have heard of before. They are a really large mining company who are one of the world's largest silver producing companies in the world. And they have really benefited from all of the increases in price of precious metals this year, like gold and silver. And at current point, so this is at mid-December, their share is up over 360% this year. And if we consider who's bottom of the class, unfortunately, it's a stock or company called WPP, who you may well have heard of. They're a very large media kind of communications and advertising business. And unfortunately, their share price has plummeted by 60% this year alone. The main reason for this being their earnings have really missed what they were forecasted to do. So unfortunately, their share price has more than halved. And what about America? Let's have a look at their star performer and who performed the worst. And I'm sure many of you were thinking Nvidia would top the list. They've taken all the headlines recently with all of their chips being used to kind of enable all of this AI boom that we've seen. But in reality, their share price has only increased about 30% this year. And the winner was almost 10 times that. It was a company called Western Digital Corp. They're one of the world's largest producers of hard disk drives. And their share price, as we currently look at things, is about 310% in the positive, enabling people to have almost tripled their money since the 1st of January 2025. And the run to the litter for the US market is a business known as Fiserv. They are basically a fintech enabler. They provide payment solutions, credit solutions for companies that are looking to expand in financial services. And unfortunately, their profit forecasts have also plummeted, leading to their share price to be falling by about 60% as we currently look at things. Now for the important bit, what do we actually do with all of this information? Now, if you are a long-term investor, usually the best course of action is going to be to do absolutely nothing, because markets go up, they go down, shares also go up and down. And this is why you always need to grab hold of your golden rules of investing that keep you safe. Stay really well diversified. Make sure you're investing for the long term. Make sure you've got an emergency fund so you don't need to sell your investments when they're performing terribly. And if you do all of those things, you should be in pretty good shape over the long term. Of course, not guaranteed. The other thing to note, especially when shares are performing badly, is that they are the same businesses that they always have been. It's just that they are incredibly cheap relative to where they were some months ago. And this is where the challenge of investing comes in. Sometimes that might be an early sign that that business is going to fail. Ultimately, no one wants to hold their shares because they don't see a positive outlook for them. But also some businesses rebound and perform really, really well for many, many years to come, especially if we look at moments like the 2008 financial crisis, if we look at the dot-com bubble bursting. Companies like Amazon, major banks like JP Morgan, their share prices would have close to halved during those times, but now they are world-leading companies and continue to perform well. And so that's why your golden rules are so important, and it's so important not to panic too much when you see numbers in the red.